Ask Abby, providing answers, insights, and education designed to give you the tools and knowledge you need to thrive financially and live confidently in retirement.
And welcome into another edition of Ask Abby with Abby Reed of the Reed Financial Group, the retirement family. Abby, a lot of people are worried about inflation. We're paying more for almost everything that we are buying. What do we need to understand about the cost increases that we've seen and the response that the Fed is taking?
Right. So it's great to be here again, Peter. So it's nice to see you. And inflation is one of the biggest concerns and one of the most common questions that we're getting these days. So with inflation being as high as it's been in decades, also coming off of a period of time where inflation was very low, actually below normal levels. So it's really the shock of the complete 180 that's happened with inflation. A lot of times we find that people have a pretty short frame of reference. So sometimes we talk to people that are planning for retirement and realizing they need some help, and they really didn't even think about inflation being 4, 5, 6% at any point in time. So it's one of those things that hasn't gotten a lot of attention before this last year, and now here it is, and it's surprising a lot of people, and it's affecting people. All sorts of people. So whether you're in the accumulation phase or the preservation phase, or whether you're in retirement and you're starting to take those withdrawals from your life savings, it's affecting everybody. It's just the result of those of that is going to be different depending on the stage of life that you're in. Also, the cause of inflation in this period of time was the coronavirus. So obviously we all know what happened there. Everything had to shut down. And then the Fed determined that it was best to pump in money into the economy to keep everything afloat. So to make sure that we didn't plunge into a recession or a depression at that point in time.
Did they overstep?
Well, that's what the market thinks. So this past raise in interest rates that happened recently, it's affected the market consistently throughout the year. This past one was pretty dramatic, and that was the market saying, we think collectively that it's too much, too fast, and it's making a lot of people uncomfortable.
And raising the interest rates is the Fed's weapon to try to control inflation. Has been in previous times in the late 70s, early 80s. Here again, that's the tool that they are using. 5 interest rate hikes so far this year, and more on the horizon, according to statements from Fed Chair Jerome Powell.
Right. They've been very clear that they will do whatever they can to control inflation. That's their number one goal. How it affects the market is not really their concern at this point in time. And they're going to do so aggressively. So that's been their stance this entire time since the numbers started coming out that inflation was going to be a little bit tougher to handle than people might have thought. And so they're going to continue doing that if necessary. And that's one of their tools in their tool belt to control inflation and try and keep the economy propped up so that we don't go into a recession or a depression. And so I think it's safe to assume that they're going to continue that until inflation is under control.
And there's really 2 aspects of inflation as I see it. The day-to-day expenses that we have to try to address, and then maintaining the purchasing power of our long-term investment money. Is there anything that Americans can do on either side of that to combat the effects of inflation?
Right. So to combat the effects of inflation, there's a couple of things that you can do right now. So in terms of looking at your savings and your investments, historically, one of the best hedges against inflation, or ways to protect yourself in the long term from the eroding effect that inflation has on your money is to have at least a certain percentage of your portfolio in equities. So those have historically done pretty well hedging against inflation, protecting your purchasing power. The amount or the percentage that each person has allocated to equities is going to depend. That's really a personal thing. It depends on your risk tolerance, your risk capacity, how old you are, when you want to retire, all of those types of things. But it's typically appropriate to have at least some percentage of your life savings, your investments, your retirement accounts allocated to equities to protect your future self, to make sure that your lifestyle in 10, 20 years, you can maintain the lifestyle that you have now. On the other side of that is the bank account or the CDs, that lazy money, as we call it, that has been very, very lazy the last several years, 5 years at least. So one of the good things about inflation is that it has caused the Fed to raise those interest rates, and that can actually trickle down into a positive thing for certain types of options for your savings and your investments. So the more conservative options that have maybe some principal protection, aren't equities. There's some different options. They're going to start to raise the interest rates on that, and we've seen that already. And what we've also seen is really a historic rush to those safe options because they haven't been a really good option for people for a long time. And people want that security. They want a little bit more peace of mind. They want to not take as much risk. And so now that those can keep up with inflation, people are very interested in that. And so that's what I would recommend, is just taking a look at how you're allocated, and try and ask yourself, is this appropriate for where I am in life? Is this appropriate for my goals? Or are there some things that I need to change because we're dealing with different things right now?
Abby Reed of Reed Financial Group, the retirement family. If you would like a complimentary review, a retirement planning strategy session to get your plan together, or if you'd just like to ask a question, you can visit goaskabby.com. That's goaskabby.com, or give a call 678-422-0255, 678-422-0255, or goaskabby.com. Thank you for the insight today on inflation and what we may want to consider doing about it.
Thanks, Peter.
Here to answer your financial questions, visit the website goaskabby.com for show resources and to submit your questions and get answers, or to schedule your complimentary financial investment and retirement planning strategy session. You can also reach out to Abby directly at 678-442-0255. That's 678-442-0255, or at goaskabby.com.
Investment advisory services offered through Brookstone Capital Management, LLC, BCM, a registered investment advisor. BCM and Reed Financial Group are independent of each other. Insurance products and services are not offered through BCM, but are offered and sold through individually licensed and appointed agents. Third-party ratings and recognitions are no guarantee of future investment success and do not ensure that a client or prospective client will experience a higher level of performance or results. These ratings should not be construed as an endorsement of the advisor by any client, nor are they representative of any one client's evaluation. The information presented on this program is provided for informational purposes only, without warranty of accuracy, completeness, or suitability for a particular purpose. This program is not intended to be and does not constitute financial, investment, legal, or tax advice. This information is general in nature, not specific enough to be construed as advice. You should not make any decision based on the information presented on this program without independent consultation with an appropriately licensed professional or competent advisor. Investment in securities or the market involves a potential risk for loss of principal. Trading, therefore, may not be suitable for all listeners. Annuity guarantees are based solely on the financial strength and claims-paying ability of the issuing company. Withdrawals of growth from annuities may be taxable as ordinary income in the year it is taken. Individuals should review contracts for specific details of the product's features and costs. Early withdrawals may subject the owner to penalties, fees, or taxes.